Okay, so what kind of situation do we currently have on Euro USD? Now, first of all, we have a market that has approached a very important monthly low here and has rejected it to the upside. In fact, first time that the market hit this area, it was here and it rejected this zone to the upside. And then again, the market went to retest this area with multiple monthly candles which all rejected its zone and closed above the area, and then the market started this move to the upside. Specifically, after this monthly candle here, we definitely expected a continuation to the upside because, as you know, this candle here is the candle that the next one is supposed to fill in the wick. Going down on the weekly time frame, what do we have? Now, from a weekly perspective, we have a market that has created a nice impulse and a nice correction. And we definitely would like to see the market create the continuation to the upside, which is exactly what the market has done. In fact, if you remember, what did we say? We said, first of all, we expected this retracement to go and retest this previous resistance, now turn support, which was also the structure level aligning the best with the structure level aligning the best with the Fibonacci's. In fact, if we want informations on a retracement in the market, where are we supposed to be putting our Fibonacci? From the low to the high of the impulse. And what we could see that we had a 0.382 Fibonacci retracement lining up perfectly with this previous resistance, now turn support, creating a confluence of support that we definitely expected the market first to test and then to reject to the upside. And currently the market has just created a huge move to the upside and definitely seems overextended and in need of a retracement. Going down on the daily, what we can see. Now on the daily time frame, first of all, why did we want to see this retracement and how did we wanted to see it to happen? We wanted to see the market retracing this way, first of all, because we wanted to see the market go and hunt all the stop losses that were above this high, which is exactly what the market has done, and then start this move to the downside, which is exactly what the market has done as well. And I will link this previous analysis in description. And after that, what did we expect? We expected the market, after creating this impulse, to make a retracement and from here start this big move to the upside, which is exactly what the market has done. And I will link also this previous analysis in which from here I said that we definitely expected this move to the upside on a description for more free education and analysis. And why did we want to see all this huge move to the upside? Because clearly, not only from a technical perspective, everything was bullish, but also if we go and see what we have from a COT perspective, so commitment of traders, which is what the biggest banks and institutions were doing on Euro USD, what we can see. We can see that clearly institutions were adding massive longs. In fact, we went from 147k longs all the way up to 262k longs. So basically almost doubling their long positions and bringing net positions from minus 114k. So from a situation where we had way more shorts than longs with 271k shorts and 157k longs to a situation where we now have way more longs than shorts with 180k net positions. And if we check the euro, we are already checking euro USD because all currencies on the spot are traded against the USD. So if you check the euro, you are already checking euro USD. And now that the market has created this huge move to the upside and all these longs have already been reflected in the market with this huge move to the upside, we can expect some profit taking on all these longs. So we would like to see the market give us a retracement. However, we still don't have any confirmations for that. The new report is coming out tomorrow and it would be great to see some profit taking on all these longs. Anyway, can we be looking for any shorts at the moment? Just because we want to see a retracement doesn't mean that the market will make a retracement. That is why trading is reactive and it is not predictive. And until the market will remain above this daily support, the market can and should continue to the upside because there is absolutely no bearish structure on the daily time frame yet. So you would be shorting at a daily support level, which is never a good idea because you're trading against the direction of the market. So how we will be approaching this situation, a situation in which we want to see a retracement. However, all the structure on the daily is still bullish. What we will be doing with students is first, we will be waiting for the market on the daily to actually break below the structure, and only if the market will actually manage to break below the structure, at that point on the retracement back inside of the structure, So here, to go and retest this previous support, not on resistance, only after the market will have broken and retested. Inside of this area, we will be monitoring price action with students on the 4-hour time frame, waiting for the market to provide to us one of our valid entries. And as soon as the market will provide to us one of our valid entries, we will be taking a nice short with a very good risk to reward and very good probabilities for the move to the downside, creation of this impulse correction, impulse pattern to the downside, and for the market to give us a retracement from all this bullishness and some profit taking from an institutional perspective on all these longs. Now, if you enjoyed this free analysis and education, make sure you drop a like and a comment. It really does support the creation of more free education and analysis for all of you. And I will see you in the next video.